Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be digging into Netflix stock and try to make a price projection for this one heading into 2022. Netflix to me is an underloved stock right now. It's not necessarily the cheapest stock of all time, but they still have some strong growth prospects both on the top and the bottom lines over the next several years. So we're going to go through the bear case, the bull case, and I'll make some price projections for January of 2022. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. However, if you do enjoy stock market analysis like this and other personal finance videos, please give the video a like, subscribe to the channel. Thank you all for your support. All right, so thinking about some of the bear cases for Netflix right now, I think the number one on everybody's tongue is probably competition. You know, you've got Disney Plus, HBO Max, Paramount's got stuff out now. It seems like everybody has some sort of streaming offering, including Amazon, that doesn't necessarily charge for streaming in the same way Netflix does, but they are certainly a top competitor in there. And if you've ever listened to Reed Hastings, the CEO, talk about Amazon, he has said time and time again that they are their top competitor. So competition for the consumer dollar is definitely a thing. You know, with the pandemic last year, I think everyone was going all out on their entertainment options. But at some point here in the near future, a lot of folks in America are going to have to make a pick on what is their favorite service, or else you're just going to end up paying the same bill as the old cable by the time you have a dozen of these things on your credit card. So competition combined, in my opinion, with the return of society and social activity, right? Folks going outside, going to concerts, the entertainment budget will be spent differently over the next couple years, certainly than it was when we were all in lockdown. So the return of other spending opportunities, whether it's streaming services, concerts, other kinds of events. Those are things that Netflix also has to compete with, so we'll have to keep an eye on that. All right, the other bear case that you're going to hear for Netflix is the cost of production. They've definitely turned into more of a production studio, bringing a lot of their own original titles in. And most people think that some of the other companies are going to pare back on the third-party content that they offer to Netflix to be rented because they'll want to put it on their own app or platform. We'll have to see how that turns out. But the movies and shows that Netflix makes in-house, they've spent a ton of money on it, and it's always the biggest number on the negative side of the balance sheet. Now, I, for one, take it as a bull case for the growth of the future, but the X factor in there is the quality of content. And when Netflix first started making shows, they were kind of mixed, to be honest with you. I didn't find a lot of them satisfactory, but my mindset has changed, and a lot of the stuff that's coming out now from Netflix is really good. I started watching a show last night called Sweet Tooth, and it was absolutely phenomenal. Now, interestingly enough, that was a partnership of some kind with Warner Brothers, so we'll see where that lands over the long term. But Netflix has got a lot of great original content, and don't forget that during the pandemic, all studios and production houses were basically closed down for COVID protocols. So it really set Netflix and many others back in terms of content production, and we're about to see that take off. All the projects that had started or just needed a little bit of tweaking before they could go live, those are all being launched this year, so we'll see how Netflix does on the quality side. This is a company, again, growing top and bottom line. So the price that you pay for the stock today, depending on when you get it, it almost assuredly will go up in the future, certainly if you were to hold it for multiple years. Netflix also has several tricks up their sleeve, or opportunities, if you will, in terms of international expansion, the growth of their content library, which continues to pay dividends because new subscribers come in and they haven't seen all those shows from the past couple years, right? And you can also take American shows and license them out to your international markets, change some closed captions and some voiceovers, and you got brand new content for other countries that they might like. But the biggest bull case, in my opinion, is just this sort of software-like compounding returns, right? People worry about the net new additions for Netflix a lot. There's a ton of focus on it. I think we saw some abnormalities with the way subscriptions grew in 2020. Certainly looks that way on both the Disney side and the Netflix side. But overall, their base, while not growing necessarily as fast as analysts like, their base is growing. And the most important part of that is that everything that they add is additional to their monthly revenue, right? It's a subscription-based service. So the core continues to stand tall. They're not showing a lot of attrition, and they're adding accounts, and we still have international to go. So this stock could become a beast. It's not necessarily going to be a high growth, double your money in 6 months kind of stock. So if you're looking for a safe, predictable investment that's certainly a lot better than a savings account, Netflix offers growth, and they also offer EPS, and quite possibly, probably only a few years away from offering a dividend as well. All right, here's the 1-year daily chart for Netflix. You can see how things really spiked up during the pandemic, no surprise. Then you kind of have this new trading range that is going on here, and we'll get into valuation in a second. But right now you are trading under both the 50 and 200-day average, relatively low RSI by Netflix standards, 43. That's sort of been back and forth in the 30s here recently. So you have a stock, as I alluded to right in the beginning, that's just kind of lost its favor with investors. You don't have a ton of money piling in when you compare it to some of certainly the meme stocks that are going on right now. But that's oftentimes where you can find some of the best value is stocks that are not super popular. And Netflix looks to at least check off that box. All right, taking a look at the historical valuations, trying to figure out here, what is Netflix valuation today compared to the past? We're using annual metrics dating back, it looks like 2014. And most importantly, we want to look at the forward PE, right? Because trailing PE is in the past, so we want to try to look ahead, sort of speculate ahead where things are going to go. And you can see right off the bat, a forward PE of 48 by Netflix standards is one of the lowest that we've seen over the past 7 years or so. The average appears, I'd call the safe average to be around 60 and 65. Looking at PEG ratio at 153, you're very close to some of the lower numbers that we've seen in Netflix history. Price to sales at 8.5 times. That's probably running a little bit hotter, but don't forget that's a trailing 12 months metric, so I don't put as much stock into that. Scrolling down to the balance sheet, we got trailing 12 months revenue of $26.3 billion. Total cash on hand, $8.4 billion, and total debt of $17 billion. So they've definitely got a decent chunk of debt, but at $17 billion in total debt, and you're bringing in revenue of $26.39 billion, I would make the argument that they have more than enough to service it, and some of the content creation costs come on the front side, and those tend to pay out later. On the short side of things, short percentage of float on May 14th, 2%. Doesn't appear to be a lot to worry about in that camp. All right, let's take a look at what analysts are projecting for Netflix, both revenue and EPS for 2021 and 2022. Year ago was 608. This year, the average estimate is 1050. So, well over $4 added to that. You do have a high estimate of 1153. Looking ahead to next year, the average comes in about $13 and the low comes in about 1113. When we look at the revenue side, last year they had $25 billion in sales. This year, inching up to 30 on the average, and then 35 heading into 2022. So that's a healthy double-digit growth rate, 18.9% this year if they were to hit it, and 15.2% next year if they were to hit that. Looking at TipRanks to see what do the best performing analysts think about Netflix over the next 12 months. And you can see we have several updates. Most of them came in 2 months ago when the earnings release came out, but we do have a few people who have jumped back in to update their picks over the past 20 days. And it's mostly good news. You can see we do have our one Netflix bear here, Matthew Harrigan. He's got to sell at $4.48. Remember, today's price is about $4.92. But everyone else is in the buy camp. And you have some targets over the past 20 days as high as plus 38%, plus 33%. The most recent update is plus 14% at a price target of $5.60. All right, so using my own math, here's some Netflix projections today, June 7th, 2021. Price is $4.92. Current forward PE is 49. That's based on an EPS projection at the end of the year of $10.55. We know that their fiscal year runs traditional to the calendar. So with my projection, I'm looking ahead to January 2022. That is when the Q4 results will be released from the year prior. I'm projecting forward PE in the range of 45 to 60. And at that point, our forward PE is going to be looking ahead to 2022 EPS projections. And if you remember from the Analyst tab, a lot of analysts were in about the $13 range. I'm going to pull that back just a little bit to $12.50 for my own calculation. That gives us a price between $5.62 and $7.50 for Netflix. Again, that target is for January 2022 when their Q4 earnings are posted. All right, so that's just a short-term price projection for Netflix. Guys, I really do like this stock, and I think that it's a sensible buy right now at about $490. To me, the double-digit growth in revenue combined with EPS growth is really just a calculation for success. Again, you're not going to get 100% return, but this has a place in a lot of folks' portfolio, especially if you're a subscriber to Netflix, gain a little bit back on that subscription that you're using. I do see quite a bit of internet bears for Netflix, whether it's on Twitter or comments on articles and stuff like that. And I say blow them off. I really do. I think a lot of them talk about the quality of shows. If you've ever been to a movie review site, some of the expectations that viewers have for movies sometimes are pretty lofty. I go into Netflix as a simple getaway, a little bit of entertainment. It's also great for my family and kids when they need a little bit of entertainment. I'm not expecting every movie I watch on Netflix to be some sort of Oscar winner. I enjoy the service, and I've seen some very entertaining shows over the past several years. So I'm bullish on Netflix for the long term. Let me know what you think in the comments. Thanks for watching. Please give a like and subscribe. We'll see you on the next video.